Hey everybody, Brian from Bearable Traders here. It is yet again another weekend. It's November 18th. We are heading into a very shortened trading week this week, but lots to talk about, lots to go over from last week. And so let's get down to it. So let's start out by looking at what happened last week, as we always do. Everybody was anxiously awaiting the CPI and PPI data that was coming out Tuesday and Wednesday, their read on inflation. And as it turns out, the numbers came in lower than expected, which was great news for the bulls. And the prospect of future rate hikes seemed a lot less likely. Treasury yields fell significantly, sort of reflecting that view. So that was all good news for the markets this week, and you can see that's reflected in the good gains we had on all the indexes. Dow, Q, SPY, all up 2%-ish, and the IWM, which was really the big laggard last week, down 3-something%. It ripped higher, turned and burned 5.4% up on the week for the IWM. The small cap index, of course, that's where people seem to want to put their money this week in the more risky smaller cap stocks. Areas of strength, there were no areas of weakness really. Every sector was green. The greenest of the green were real estate and materials. And materials, of course, benefiting from a lower US dollar, which we got. We'll talk about that in a sec. Consumer staples, they gained the least on the week, but still up on the week overall. You can see here the treasury yields dropped significantly, as I already mentioned, dollar down 1.8% with these treasury yields dropping as well, highly correlated to the two. And you can see Bitcoin a little bit weaker at 36,400, which was the last time I checked. So that was how we finished the week, and it was a pretty good week, and it still bodes well for the coming weeks ahead, I think. So let's skip ahead here and look at some charts. And as always, before we start looking at some charts, I always like to take a quick break for a mention of my book that's available on Amazon. I've got two of them. One is called Profiting as an Active Trader. You can see that guide to trading tools, money management, rules, strategies, and the routines of an active stock, and even a little options thrown in there. And a quick mention also, I do have an options book that will be coming out shortly, probably within the next week or two. So we'll be mentioning that. And let's get on to looking at some charts here now. You can see here, we always start out with the treasuries, and this is, again, you can see here we've pretty much been flatlining the 2-year. There's really, although it did come off, as I said last week, you can see really all the stochastics, the MACD, all these momentum indicators are indicating that maybe we are starting to roll over a bit. Good news for the bulls and for the market in general. Actually, there's a lot of mortgages out there that are probably coming due, and if they start having to renew at these higher levels, they're going to be painful. And speaking of rolling over, here's the 10-year. You can see here another big step down here on the 10-year yield as well, which of course is good news. All the momentum indicators going in the right direction for lower yields. And of course higher bond prices. So let's take a look at the transports. Again, transports had a pretty good week here. Stayed above the 200-day moving average. We were down below it for quite a while. Now we're above it. I would say volume is kind of meh. And you can see here another really good week for the transports. Volume a little bit light, but again, momentum trending up, which is the direction you wanted to see if you're a bull. Again, the Dow, you can see here 3 days where we kind of just sitting right here at this 35,000 level. I did flag that last week as an area of resistance, and it seems to be finding resistance there. So I'd be watching for a breakout from there. That's a pretty decent level to be watching. But we are pretty extended. Take a look at the Stokes here. I mean, they are very extended. Like I said, we may just be churning along here, but the trend is your friend, and it looks like it's going a little higher. Again, nice little breakout here last on the weekly, looking good there for the Dow. And again, the Qs, Tuesday after that CPI released the data, and then the rest of the week all just kind of hanging in there. It's right at this high, this sort of 390 level, And we are looking like we are going to try to break through it here. You can see pretty extended again, as I said, on the momentum indicators. And you can see here the volume is not great. But having said that, you don't always need volume to make a move higher. And we did break out of this intermediate level, and we are going to go testing this, or trying to break out of this level, and maybe going up to retest this 400 level by the end of the year, if all goes according to plan and there's nothing untoward happens. The SPY, again, really close to a breakout from this September period. You can see here looking pretty good there. Again, trend is your friend, and it does seem like it's eking up here. On a weekly, again, we're at this intermediate high, and I'd watch for another break higher even this week. IWM had a really nice move on after that CPI data. Tried to spike up here, pulled back down, and now we're back here. But this is an area where, we're into some congestion in terms of where people have been positioned before, volume dropping off a little bit. So, if we do get a continuation move, IWM should do fairly well here. On a weekly, we're still down below this 200-day or 200-week moving average, all these moving averages here, but it does look like we are going to try to break out from that level. The VIX again, we are really right down into some basement levels like we've seen here before, so no fear in the market at this point. And the dollar, you can see here, the dollar is really was strong, and now it's with the interest rates going higher and higher, and now we've really rolled over in anticipation of lower yields going forward. And there's the weekly looking very weak as well. Bitcoin up a little bit here on the weekend, 36,750, and again a little bit of a pullback here, but this still looks fairly bullish for another move higher. This is kind of an area here where we had some support, which eventually broke down, and now it has become resistance here, but this still looks sort of positive to move back up, and volume pretty decent. We are a little bit overbought here as far as the stochastics, and RSI kind of rolling over a little bit here. So we may have some more work to do before we do see a breakout on Bitcoin. Okay, so let's take a look at some stocks that I'm watching next week. And again, it is a very shortened trading week, so this list is going to be fairly short as well. But, some of the common stocks we are watching here is Apple. Again, we've kind of filled this gap for a second time. We had a fill here, and now we've filled the gap again. There's a fair amount of overhead supply here. A lot of people have been in this stock up in this range here, that this is probably going to be an area we're going to sort of churn around for a while. We are sort of oversold on these stochastics and RSI, so again, maybe a little bit of work here before, and if we can push higher. But Apple, really, what an incredible run since the end of October there. AMD, the semis have been doing really well. AMD is just rocketing higher. Again, we are into an area that's been prior resistance back here, and but it does look like it. These pullbacks are getting bought back up. So AMD looking like it may want to push higher here. Semis on fire, but watch out. Nvidia is reporting on Tuesday after the close, and I think anything Nvidia says or how they report will probably impact the rest of the semiconductor market. Amazon, again, pretty strong performance. We are up into an area that's been prior resistance here. This is sort of the story of the tape right now. We've had such an incredible run. All these stocks are into areas where they're, they've seen some prior resistance before, near all-time highs. Microsoft, I think, was making all-time highs until Friday when it pulled back. And then actually there was some news on Microsoft after the close, which everybody is probably aware of, about the Sam Altman and this AI company he's been let go from, and Microsoft got a investment in them, so Microsoft dropped a little after the close here on Friday. So it'll be interesting to see what the reaction is, but I think Microsoft will be could be a buy if there is some sort of panic selling. Meta's again, this is breaking out here. You can see the prior levels of resistance, and now we had a breakout, and this is a very common pullback after a breakout. You go through the level, and then you come back and retest it, and basically you just get a confirmation that this is a new level of support now, now that you're above this level of resistance. So watch for Meta to go higher. I think the Meta looks pretty good here. NVIDIA, again, no trade for NVIDIA this week until they report, and that's again Tuesday after the close. At least not for me. I just don't like trading stuff into earnings. I think it's a 7% either way move, so it's really hard to say which way NVIDIA is going to go. I mean, even if they do come out with good numbers, and go back again, even if they do come out with good numbers, I mean, look at this run from over the last month. It's just amazing. So, a lot of people could be anticipating good numbers, so they could get sold off. So you just don't know how they are going to react to the numbers. Tesla had a decent week. Actually, on Tuesday we gapped up and pulled back here. I think Tesla looks a little bit better on a weekly chart. If you want to see where we're trading, we seem to be finding support somewhere around this 200 level and resistance around 250. So the ATR on Tesla obviously fairly big. It is a very commonly traded retail stock. I think one of the highest retail stock volumes of all the companies. So it does tend to move around a lot, and it seems to be stuck in a range. This is something that I'm involved with. As you know, I've been trading the Cameco's uranium company. They've had a great run. I didn't put that chart up, but I just wanted to put up this chart of this global X uranium ETF. Uranium is really, I think going to come on as an energy fuel in the coming years, because it's clean, and it's expensive to build these power plants, but they are 100%, they are emission free basically. They don't come without their own problems, but I think uranium is going to be, as we're moving to more renewables, we still need a sustainable, base load, something to carry us through when there's no wind or sunshine. So I think uranium is going to be playing a bigger part, and they've got these new sort of small scale uranium plants that are built, and I think they're a lot safer than the older technologies. So watch for uranium. I think is a long-term story here. Energy, I got a little bit of XLE on Friday, and some other energy stocks. I think it looks like we may have put in a bottom here. We've got a bit of a double bottom going on. And so I'm just playing this maybe for a bounce, see if we can get back up, into this 86, 87 area here. So long a little XLE as well. And technology, of course, technology breaking out this week. And you can see here, it just looks like it wants to go higher. And I mentioned this last week as well. So the XLK. So that's kind of what I'm watching this week. Again, shortened trading week. So won't be very active. And we'll just kind of watch what happens with NVIDIA. So wrapping things up here on this coming shortened trading week. Thursday, obviously, Thanksgiving, and Friday, pretty lame day usually, because most people take those 2 days off. But you can see here, there's your indexes where they sit right now. We are pretty close to some breakout levels here on the Qs and SPY. And so I think, again, we look fairly bullish here going into the end of the year. Again, sort of light on the economic data because it is a shortened trading week, but we do have the Fed minutes being released at 2 o'clock. That might cause some volatility. And jobless claims, usually on the Thursday, will show up on the Wednesday with durable goods, and 10 a.m. we'll get this consumer confidence. As far as earnings go, we do have a little bit of earnings this week that are going to be very interesting. The most notable, of course, is NVIDIA. Everybody's anxiously awaiting their numbers, given the importance of AI this year. on a lot of the stocks. But you can see here we do have a lot of retailers. We've got Deere as well. Zoom could be interesting. So yeah, a lot of should be interesting. Some releases here. So that's it, everybody. Enjoy your rest of your weekend. And we'll hopefully see you at 8 o'clock live on YouTube on Monday morning, where we start our pre-market show, and then, of course, trading the market open with our members at 9:30. So take care, everybody. Have a great rest of the weekend, and we'll see you hopefully Monday.